Breaking news, we just hit the bell for the end of the day on Wall Street, and it was one of the worst days in recent memory. And much of that is being blamed on President Trump's tariff announcement. Joining us now is financial expert Michael Armstrong from the Armstrong Advisory Group. Michael, thank you for taking some time to talk to us this afternoon.
Thank you for having me.
Now, Michael, what do you make of this very rough day on the market, and where does that leave investors with their 401k?
Yeah, so to highlight a few of these, worst day on the Dow since 2020 during those COVID sell-off days. The S&P finished down over 4.5%, the NASDAQ closer to 6%. In terms of just where that puts us now, we're back at stock levels on the S&P 500 that we last saw back in August of last year. So wiping out, a good portion of gains that we had seen in the latter half of 24. Beginning of 2025. First of all, I guess I would start by acknowledging that it is scary out there in markets for folks tuning in and seeing their 401ks go through that. I fully recognize that. And the question now becomes, what sort of path are we on with these tariffs? If they remain in force in terms of what was announced yesterday, we're talking about levels of tariffs that haven't been seen since 1909. The question becomes, is this part of a negotiating tactic? Are these just the new rules of the road? And I don't feel that we have an immense amount of clarity about that today.
And to your point, I think a lot of the people are wondering, is the worst over? Is this negotiating tactic? Was this just a panic? Is there more to come? Those are really the looming questions.
Yeah, I mean, it's pretty easy to paint this path in terms of why it would be unattractive for American businesses in the short term, right? You go take a look at China just as an example, given the volume of goods that we import. If your iPhone, all of a sudden, the components that goes into that manufactured product start costing 50-60% more, well, Apple might try and pass some of that along to the consumer, but they're probably going to experience a decline in sales and a decline in profit margin. If they want to move that manufacturing somewhere else, the question is, A, where do we move it? Because many of China's neighbors, Vietnam included, and India are also facing tariffs. And if we're going to bring it back to the United States, how much does that cost and how long does it take? So big unanswered questions here in terms of how this all plays out. I think the next 6 days until these are actually in effect are pretty critical and will be pretty telling in terms of the administration's long-term goals here. Is it a negotiation, or is it a new regime, a new normal that we need to suddenly and quickly get prepared for? But very clearly, I think that the announcements yesterday caught a lot of investors by surprise, and we're probably on the far end of expectations for what these announcements would look like in terms of the extreme push here on these tariffs.
And Michael, this leads me into my last question. What is the potential overall fallout from the tariffs to the economy as a whole?
Well, look, I mean, I think if you take a look at any source, it's immediate hits to GDP, immediate hits to earnings should they stay in place for a while. I'm willing to entertain the idea that there could be a benefit to employment, but that's going to take a long time. In the short term, what it means is companies are facing dramatic drops in earnings. In particular today, the companies that got hit the hardest are those that play in the consumer electronics space. So if you are a retailer of all sorts of electronics hardware, they took a big hit today. All sorts of apparel and home goods retailers also took a pretty big hit today on this news. And so the question becomes, does this become something more? Do these companies who are seeing their stock price take a hit pull back on hiring, pull back on employment generally and conduct layoffs? Or is this a blip in the radar because the tariffs themselves are a blip on the radar? Anyone's guess at this point, but if they remain in place as written today, it most certainly means more disruption, more hits to corporate earnings, and short term more of a concern for businesses that are out there trying to read the tea leaves.
Michael Armstrong, thank you so much for taking the time to give us this insight. We know that we will continue to check in with you as this continues to develop. Michael Armstrong from the Armstrong Advisory Group, thank you so much.